audio. All right. All right, everyone. That was that was a fantastic panel. Thanks everyone for sharing thoughts. Just to reintroduce myself, guys, I'm George Rzepecki, the founder of Raba. We're a little different than most investment firms, and I'll tell you about that. But today is to talk about software, money. You cannot talk about software without including AI, and we'll talk about less obvious markets, which is something I'm very, very excited about. Gosh, if AI was available. There we go. All right. So a little bit about us. We like to be in markets where there's just less attention. We like to be in markets where far, far away from where I moved from, which is the Silicon Valley. And so when others zig, we zag. So fiercely independent in kind of how we think about it. Day one mentality, some of my favorite founders, whether it's Jeff Bezos, hearing about the founder of, let's say, Anthropic, it's just you're constantly learning. You're going to be humbled. We make mistakes. We're humans. And I think that mentality is very, very much sort of grounds me. But to be able to do what we do, you can only do it if you have long-term partners. And so we're long-term people in business with other long-term people. And without their support, we wouldn't be able to do what we do. We wouldn't be able to think the way we do. And that's paramount. So that's a bit about us. Okay, thank you. Wonderful. Okay, all right. This one will be pretty easy. Show of hands who recognizes this logo. All right, 90s, okay. And this one? Okay, maybe 70s. Okay, and this one? One person. Okay, so in chronological order, OpenAI, yeah, big consumer base, yeah. Claude, more enterprise, but gaining adoption in the consumer space. This is Moonshot AI, Chinese company. It's actually my preferred model for my agents, which is Kimi K2.5 for those who've built on top of their platform. You recognize maybe the logo. So I'm going to talk a little bit about AI. So this is a famous sentence that Mark Andreessen uttered almost 15 years ago, which is, why software is eating the world. And he was spot on. Software was eating the world. It's been eating the world for a long time. It's been very good. In fact, so good that it made Bill Gates one of the wealthiest people in the world. Make one copy, sell it many times, low marginal cost of distribution. It's been a great place to invest, great place to hang out, great place to build businesses. Is it under attack? I don't know, right? Our merchant of record companies, there's a lot of question marks on that, but certainly if you judge it by public market sentiment, it's a toss-up on where this goes. So this is a newsletter that I subscribe to from a firm called Altimeter. In the last few weeks, they've had a couple of these headlines as software's dead, maybe it's not, maybe it's dead. So no one knows. Is it dead? Is it not? We're not here to answer that, but it is something interesting to pontificate about. But what has changed is the input. So the panel that was up there, I think this is changing much faster than people appreciate. So, George made the comment that maybe it's not having the same impact on engineering as it is in other areas. But there was this, I would call it Opus moment, right, with Opus 4.5, where if you go to Reddit and you read what engineers are writing, they're saying, look, let's just read the top here. It says, it's the first model that's come up where it makes me actually fear my job, right? And now there's 4.6, and there's going to be other models. So I think this has profound ramifications for how companies get built. I really sincerely do. And I'm going to talk more about that. So, but what does it mean in the interim? Is there 1,000 software flowers bloom? Does everybody become a software engineer? Everybody's vibe coding different things. I have friends that are building tools over the weekend, putting them into production. Wild times. But is writing code largely becoming commoditized? Question mark. I think founders are going to have to make decisions on the economics of their business. Am I buying tokens or am I paying for labor? I think these will be real questions that people will have to grapple with. And I think you have to move fast. I don't think this is an area that you have the comfort of waiting on. you have an advantage as a small company, but the window, in my humble opinion, is finite. So this is from very recently, February 12th. Spotify says that some of its best developers are not writing a single line of code. My understanding is that's happening at Anthropic as well. I think that's profound. Of course, there's QA, there's testing, there's moving things into production, but this is important. And this is here a quote. It's just very honest. None of us really know what we are doing. We're just trying to figure it out like everyone else. It's not a quote from me. This is a quote from Boris Cherny. He's the founder of Claude Code. Claude Code is the fastest growing platform for coding in the world. I believe it's on a run rate revenue of a few $1 billion now. So if he doesn't know what's going on and what's happening, then that begs a very interesting set of questions. And the scale of this is unprecedented. Who wants to take a stab at which company's revenue projections this is for 25 and 26? Any guess? It's OpenAI. So they're projected to go from $30 billion in revenue this year to 62, with a burn of $25 billion and $57 billion. For those doing quick math, that's $157 million of burn every day next year. I mean, I've never thought about scale like that, and it's incredible. It is incredible. So everything's on the table. I'm rebuilding how I think. One-man band, so I can, but I'm leaning in, I'm building agents, I'm messing around, I'm learning, I'm throwing some of this stuff away. But I think this is profound for me, and I think it's profound for you. But I think there's certain tenets that remain the same, which is focusing on your customer. Going back to your customer, that doesn't change. We were on the panel prior to this. One of the reasons I love fintech so much is when you reverse engineer any business, you can have great revenue growth in years 1 and 2, but how do you have it in year 10, 15, and 20? And so inherently, the question is, what's the moat? And in our part of the world, meaning financial services, licenses are the moat. And George aptly pointed out there are different quality licenses, very much so. And they dictate how strong of a moat you actually have. But to take advantage of this, I think you have to unlearn your priors. You have to be open-minded. You're going to be humble. There's going to be a 20-year-old who's going to show you something amazing, and you're going to feel like, wow, half my age and moving twice as fast. So is our experience that we've had, our cumulative experience of our work life, is that ossification? Are we ossified in some way because we're thinking in certain ways? Do we need to change that? So this is fun. I was talking to an investor friend the other day, and it's like, is this the industrial revolution time for us? Right? Is this the printing press moment? The printing press was invented in 1440. More printed material came in that half century than the 1,000 years prior to that. Is this culmination of software, the printing press moment? It's unbelievable. And so what does diffusion at scale actually mean? Right? How does it impact these ecosystems? The same AI model that's being used in California at the frontier is being used in Nairobi, it's being used in Cairo, it's being used in Cape Town. It's incumbent on us to take advantage of it. And so does that infer that the quality of local insights and licensing, does that infer that that's greater than potentially engineering talent? I don't know the answer to that, but that is an interesting question. So I was listening to an interview this past week with Eric Lyman, the founder of Ramp, one of the fastest growing financial services businesses in the world. And they asked him, what does software engineering look like in the years to come? He said it's crazy. It's a blur. You have designers shipping code. You have customer support shipping code. I was surprised that marketing reports to the CTO. And that some of the best marketing the company's ever done is now under the helm of the CTO. So this tells you, if this company's this forward-looking on this, I thought this was amazing. And let me read the last part. But what is it actually doing? Like, business is about solving problems. And Eric's saying here, the half-life of seeing a problem to how long it takes to solve is just cut in half. So how much faster can we move, right? And that's today. That's February of 2026. What happens in February 2027 and on? I think it's a fascinating question. So that's the AI. But where's the opportunity for us, the builders in the room, the founders here? Where is the opportunity? And so here's the math. Ohio has a larger GDP than South Africa. Kentucky has 2x the GDP of Kenya. And Vermont, a US state with about 750,000 people, has a larger GDP than Senegal. So you have sort of this sort of type of conversation in a boardroom in Palo Alto on Sand Hill Road where I used to work, which is like I'll show them the charts, I'll break down the math, and I'll say, yeah, but, yeah, but. It is a zeitgeist of AI. That's the focus. Let's call it what it is. So, the skeptic here is asking, how big is the GDP? And he's just thinking like, how can I track down more secondary of Anthropic? I would love to do that. And the realist is saying, this is quaint, this is cute. It's not that interesting. I think it's very interesting. And this is happening. And so here's the what and the why. The markets are just too small, George. You can't build multi-billion-dollar companies. The fund sizes have ballooned, so they now have to return such large fund sizes that it's just, the math doesn't work. They have no understanding of the local nuance or local champions. When I mention companies like Capitec, they're like, never heard of it. But it's a formidable business, and I'll walk you through some numbers. And I think partners and the associates downstream are not paid to take the risk. They're in their bubbles. Back in the 2000s, there was the Tiger management bubble where they would confer and talk about certain public equities. Venture investors perhaps and growth investors are conferring and talking about AI and the LLM companies. They're not thinking about, let me take that trip to South Africa to make that incremental investment. They're not paid to. They're not paid to. So what does that mean? And why is that as well? Perceptions. The perception gap in our market is huge. So I've lived here now for 6.5 years. I've been through load shedding. I've been through constrained water resources. But here's just some headlines. Take a look at these. I remember looking at Nubank about a decade ago, and in the Menlo Park conversation, like, yeah, but wealthy people in Brazil are taking their money out of the country. Why would you, firm in the U.S., lean into that? Man, were we wrong? Fortunately, we were lucky and fortunate. We made a good decision with Mercado Libre years prior to that. But here's one on Egypt. The ebbs and flows. The Egyptian team here will know this. There's currency movements. There's revaluations, downgrades. But look how fast things have changed. So is spring around the corner? Maybe. But look at these. Every single one of these headlines is from the last 4 to 5 weeks. South Africa's on an economic tear. Best economy in the last decade. That's from Standard Bank, the largest bank in the continent. World's best equity rally invites investors to Brazil. And the last one, that Egyptian stocks soar as investors take note of economic renewal. I believe the Egyptian stock market's up 17 or 18% year to date. You guys can back me up on that. Somewhere there. So what you have to remember is life is messy, investing is messy, markets are messy. This is a great quote from an investor that I don't know personally, but I read his writing, named Howard Marks. And for those who are interested, he runs a firm called Oaktree. But I love the quote. He says, very few things move in a straight line. The underlying principle is that things wax and wane, they go up and down, like they do in relationships, like they do in real life. And they do in economies. They do in markets. And so they rise and fall. So that there's complexity, it's messy. We lean into that, right? Where things are messy, that's usually where opportunity calls home. And so what is that opportunity? Here's a chart of various sectors and the underlying average profit pools across sectors. So on one end, you have retail, at 3%. On the other end of the spectrum, you have financial services at 18%. Huge delta. And the red bar denotes a South African bank that's approaching close to 40% profit margins and operating in a structure where there's 8 or 9 very large financial services businesses. And I compared that to JP Morgan Chase, which operates in the mid-30s. So very, very large margins. And I think partly protected by licensing, and we'll talk a little bit about that. But this is an interesting statistic for you. There's $1 billion of profit, not revenue, not gross profit, not some made-up adjusted EBITDA number, the net income, every month in South Africa generated. So when someone says to me, how can you build a big business in the market? I say, there's $12 billion of profit in the market. There's a very healthy amount of profit to go after. And that's what gets me really excited. This is a slide I put together just over 3 years ago. I compared Capitec, local bank. So for those from South Africa will know Capitec. I compared it to Chime because Chime was the darling of US consumer fintech. It was the most valuable company, in fact. Take a look at the paid-in capital. Interestingly enough, it took Capitec about a decade to get to $500 million in revenue, and it took Chime just shy of 8 years to get to the same number, but on very different resource allocation. And look at the GDP. I mean, just staggering differences. Now, 3 years ago, Capitec was an $11 billion company, and Chime was a private company valued at $25 billion. Anybody want to take a guess where that is today? I actually looked it up just this morning. Here we go. Capitec today is a $34.5 billion market cap company traded on the JSE. And Chime is an $8 billion company. One of the venture investors is in the room here. I think they did reasonably well on that. But when I mention Capitec, they say that's crazy. Never heard of this business. It just serves South Africa, by the way. And it has $35 billion of market cap. And most people don't even know it. Actually, in fact, even some of the African investors I've met have never heard of Capitec. And when I pose the question, like, what do you think the market cap is of this company? They say $1.5 billion, $2 billion. I mean, they're off by 15x. So let me talk about a company in our portfolio. I'll keep the name confidential to preserve that, but they're operating in an even smaller market than South Africa, smaller defined as GDP per capita. And it's going to take them a little over 8 years to get to $1 billion of run rate revenue. And at very healthy margins. So just to make sure I complete that loop for you. When I mention the business, people are like, how big is it? Are we talking about the same numbers? We must be talking about GMV or some other statistic. But not only is it a big business, it's been capital efficient relative to global peers, and it's gotten there at a time span that some of the best consumer fintech businesses have gotten to. Most of you will know Revolut, most of you will know Nubank, and now you're getting to know our company, which is getting to the same scale as these unbelievably run businesses, and at a fraction of the capital base. So kudos to that team. You know who's taken note of this opportunity? I was with Jamie Dimon in the end of 2024, and he was moving around the continent, opening banks. But look what he said in his 2024 annual letter. He said, African and Latin American nations want more of America, but they're getting what they need from China. It's a whole separate conversation. I have another 30 slides on just that topic alone, but I'm not going to give you those slides today. If you're interested, I'll send them to you. So what's the opportunity ahead? There are gigantic profit pools in these markets. Make no mistake about it. It's not a theoretical exercise of what customer adoption might look like. It's real. And I think the biggest unlock now is mobilizing capital to fund great entrepreneurs plus AI, which you can get licenses and move very, very fast. And small but mighty teams have an advantage. They can move much faster than the incumbents. Because the incumbents, this is what it looks like inside of an incumbent. The CEO is probably in his 50s or 60s, or she is in her 50s or 60s. He's thinking that OpenAI is a better version of Google search. It helps with the next flight to Saint-Tropez and to organize that trip. And then when some engineer wants to push this into the business, there's compliance, there's legal, you can't do that. What are you thinking? This is a risk. Right, Phil? Yeah. But you have to move really fast as this plays out. You have an advantage. I don't know how long it lasts, but there is an advantage. And just keep perspective. It's one of my favorite slides. We borrowed it from a firm, but it's the vast majority of value happens in the out years, in the nth years. And so in this slide shows you that the majority of value for these, some of the Mag 7 here has happened after the 10th year. So keep perspective. It does take a long time. And it does take a long time to accrue licenses. Maybe the LLMs can help you draft sort of your applications faster, but the process does take time. Our view is that 0 to 5 years is your license building years. And this quote struck me. I was reading a random blog from a founder building in West Africa, and it really struck me. He said, "The West is focused on protecting what they have. We're focused on building what we never had." And that really hit me, because I think that's happening. I very much do. And so some of you will recognize this gentleman. This is Charlie Munger, partner to Warren Buffett, someone I think extremely highly of, a brilliant man. But he had a great quote. He says, "Trust is one of the greatest economic forces on earth." And when I boil down our business, actually, we're very much in the business of trust. And what our business looks like is an ecosystem of trust. On one end, we have the founders who trust us in what we say, is the advice we give. But we have investors who trust us, right? They take a very long-term view on us and the markets and our judgment. And we've kind of completed this, what I call our trifecta, if you will, right? We operate in markets where I'm not from. I don't have 20, 30, 40 years of relationships, but our investors do. And every corridor in this continent, we have relationships with families that have been around in some cases for over a century. And founders who built some of the biggest businesses in those markets. These investors on the other side, many of the venture capital names there, I'm not putting those logos up because we're co-investors. No, they're investors in our fund. That means they're investors in our founders, and so they're vested in the future of the outcomes here. And I'm really proud of this. I think this is our moat, and we're going to keep compounding it for the years to come. So in summary, got a few minutes left. In summary, emerging market financial services is an incredible place to be building. There's highly profitable companies, and they're absolutely not software native, and they're definitely not AI native. So our businesses are not AI native. I think we have a lot to learn from younger people here. But the scope to build very large businesses is very much front and center. I talked about the AI opportunity. I think it's very, very quickly shifting underneath our feet. Every few months, there's a new breakthrough. Be open-minded, lean in. You might look silly in the sort of near term, but I think that will compound as you learn more. And the durability, in my opinion, is why Capitec has a $35 billion market cap. Obviously, great execution. There's an opportunity there, but it's you don't have someone coming over the top vibe coding a bank overnight. Just can't happen. And that's why global firms will not leapfrog into local markets. So thank you very much for listening.